Great, thanks Riley. So today we're going to be going through an overview of our recently released Global FinTech Report through Q2. As always, when we do these webinars, we'll be going through a lot of the investment figures and numbers in a bit of high-level fashion and going through sort of the high-level trends around the different regions and where we're seeing investment trending today and through the first half of 2017. I will mention that in the future we will have a couple sort of deeper dive webinars into more sort of regional areas. We'll be doing one on Europe FinTech moving forward, and then also on the Southeast Asia sort of region as well, sort of in the next few months to look out for. But today we'll be going through four main areas. One is sort of just global, look at the numbers through Q2, and then we'll do sort of three sections into Europe, US, and Asia as it pertains to FinTech investment trends. As we mentioned in our report that we released last week, Q2 2017 global FinTech, VC-backed FinTech startups raised $5.2 billion across 250 deals. This was certainly an increase from the drop that we had seen, and if we look at the numbers through 2017 year to date in the first half of 2017, it does actually put 2017 on pace potentially for another big record year in FinTech investing. We saw a bit of a drop off in FinTech funding between 2015 and 2016, and we'll see whether 2017 sort of bucks that trend or maybe sees less amount of funding in the second half of the year. This was certainly propelled by a few mega rounds in Q2, which we'll dive into a bit later. But here you just see sort of how drastic that shift was in Q2 versus sort of previous quarters. We had seen sort of a bump up in the beginning of last year at Q1 16, and then we saw funding really drop off over the next 3 quarters before rising again in Q1 and then certainly in Q2 when we saw sort of a big jump in terms of a multi-year high for a quarterly funding total in Q2 17. When we look at sort of where the deals have been trending over the last 5 quarters, FinTech Series A deal share hit a 5-quarter high in Q2. Again, hard to distinguish what this sort of means without going into the different markets. But here, just globally, if you think about just FinTech entirely, across all the different verticals, this is what sort of the deal share by stage looks like. Early stage, certainly we continue to keep close track of what's happening at the early stage in FinTech. At a recent sort of Future of FinTech conference, we dived into a few of the areas thematically that we've seen sort of more startup formation as well as investment interest into, including insurance, real estate finance, capital markets, regulatory technology, and a few others. But when we look at sort of the early stage global funding trend, we did see a bump up in terms of funding, and deals have trended a bit below sort of the Q1 16 high when we saw sort of deal share at the seed and Series A stage hit a quarterly high. And we saw 144 deals in Q2 17. Funding was sort of largely driven by sort of a few notable Series A deals that were quite sizable, including Upgrade, the new marketplace lending company from former Lending Club CEO Renaud Laplanche, Next Insurance, a small commercial insurance distribution startup which raised over $30 million, including from a number of strategics, and R3, the blockchain consortia, which raised a very notable sort of new financing round as well. So here you see sort of that trend over time. Deal sizes globally, we did see a small tick up, but nothing really too notable here. We've seen sort of a deal sizes at the early stage remain relatively range bound globally between 2.5 and 2.9 million, and sort of we haven't seen a drastic sort of increase in early stage FinTech deal sizes, median deal sizes over time. Late stage, we did see sort of a big jump globally in Q2 17. This was in large part due to the sort of high number of mega rounds, which grew significantly. We'll dive into that in a couple slides. But so we did see a $34 million sort of median late stage deal size compared to close to about 20 million over the last 2 quarters. So certainly a bump up after a few sort of bigger rounds that we saw driven by a number of sort of more big money investors in the space. When we look at sort of VC investors globally in FinTech, no surprise perhaps that 500 Startups was sort of most active investor, as has been in previous quarters. And then again, the mix of sort of multi-stage general venture capital firms as well as more FinTech specific funds sort of making up the top 20 global investors. Those are funds like NEA, Ribbit Capital, Index Ventures, Andreessen Horowitz, and others. And you see sort of that ranking here in terms of unique company investments over the last 5 quarters into fintech companies. Corporate participation. Continue to see a number of corporates involved in fintech deal activity globally, and making up close to about a third of all fintech deals with participation of a strategic investor. You've seen that sort of remain relatively steady over the last 5 quarters. Here, a little bit hard to see the gray there, which sort of look at European fintech unicorns. But when you look at disclosed valuations, right, so companies that have sort of disclosed in a financing round a valuation of $1 billion or more, today we see 26 fintech unicorns globally, valued at about $83 billion in aggregate. We saw 5 new fintech companies notably enter the billion-dollar club in Q2. Those include Clover Health, operating in the Medicare Advantage space here in the States, Robinhood, which raised a notable financing round from DST, the no-fee stock brokerage, Avid Exchange, Symphony Communications, the tool to allow, sort of trying to build somewhat of a new Bloomberg tool to allow financial professionals to message with each other and communicate, and Tuan Dai Wang, which is a P2P lender in China. So we've seen North America lead with about 15 fintech unicorns, followed by Asia at 7 and Europe with 4. We did see China Rapid Finance exit earlier this year at a down valuation, I believe, when it listed on a U.S. exchange. But it'll be interesting to see how this sort of changes over time. We've obviously seen continued amount of companies enter this sort of high valuation club. Whether sort of this now turns to a bit of liquidity and companies exiting will be interesting. Just some notable announcements recently. Zhong'an Insurance, which is the $8 billion China's first online-only insurance carrier, looking to potentially list on the Hong Kong exchange maybe later this year. We've seen other companies like 197, the parent of Paytm in India, raise a significant amount of financing earlier last quarter. And we've seen a number of other companies make announcements like Credit Karma, which recently announced at our Future FinTech conference that they're doing now about $500 million in revenue as of 2016, with over 75 million customers in the US. So companies certainly to watch as they sort of mature and grow into a certain scale, whether we now see this move towards potential exits. Now, when we look at sort of the reason why we did see that increase in fintech funding was largely driven by mega rounds. U.S. and North America notably actually saw 12 new deals in Q2 alone in the 3-month period, totaling $50 million or more. Asia also saw a slight uptick with 5 VC-backed fintech companies notch $50 million deals, and Europe also sort of lagging a bit, but also saw a deal as well. So certainly we're continuing to see sort of larger investments into sort of fintech proliferate in the companies globally. And North America saw certainly an increase over the last few quarters. When we look at sort of just a few of the different categories that we're monitoring, insurance, we just released our sort of Willis Towers Watson insurance technology report highlighting all the different transactions in Q2. But we did see, when we look at just VC-backed companies, we certainly did see an increase, largely on the back of perhaps more capital-intensive companies operating as insurance carriers. Those are companies in health like Bright Health and Clover Health in the U.S. Not an insurance carrier, but we also saw Trove raise a significant amount of financing. It's an on-demand personal item insurance app looking to launch in the U.S. potentially after launching earlier in Australia and the U.K. And so insurance is certainly, we continue to see sort of larger investments. Those include in Asia, where we see new general insurers in India, and we've seen companies in Singapore and the UK also raise significant amounts of capital in Q2, and that sort of increased the amount of funding on a quarterly basis after we saw sort of relatively range-bound financing over the last 3 quarters. Wealth tech, which when we look at companies that are not just in the robo-advisory space, but allowing individuals to invest in different financial products, we saw that sort of hit a 5-quarter high. This was, and this also includes B2B companies like Adapar, which raised a pretty sizable financing. But globally, we saw wealth tech raise a large amount of money driven by companies like Robinhood, Futu Securities, which allows Chinese consumers to buy stocks in sort of global markets. Also raised a very notable round. So you see sort of wealth tech also did see an uptick in Q2 similar to insurance. We'll certainly be monitoring this category as well moving forward. I will mention one thing that we will be having a sort of a longer teardown on Betterment versus Wealthfront that we'll be releasing relatively shortly, and look out for that as well as we dive into a lot of the numbers and publicly disclosed SEC filings around the two robo-advisors. Blockchain and Bitcoin, obviously all the discussion and talk has now moved to token sales and or otherwise referred to as initial coin offerings. But we did see investment in terms of equity or sort of financial investment drive up. This was largely on the back of R3. So if you took out sort of R3's round, actually it would be lower. It would be lower than what we saw in Q1. Similar to sort of in the 100 million range. So I think a lot of the discussion is now around what certain tokens are enabling. We did see, if you think about early stage blockchain financing, we released some data earlier that the amount of funding raised in token sales has now far surpassed what we're seeing in terms of equity financing to early stage blockchain startups. So certainly continue to monitor that, and as we see venture funds now allocating a certain amount of capital to token sales, as well as more sort of blockchain specific funds also looking to invest more heavily in tokens, certainly monitoring what's happening there as well. We also look at sort of where banks are investing in fintech. This was a graphic we put out in June around sort of where the largest U.S. banks rank in terms of fintech investments. Citi and Goldman Sachs, obviously, as we've mentioned in previous webinars, continue to lead the way in terms of banks who are invested in fintech. And here we broke it out by certain verticals where we see, Goldman perhaps invested in areas where we see other banks have not. Companies like Cadre and Better, perhaps in the Better Mortgage, in the real estate tech category. We've seen investments into sort of more emerging market companies like Momo, the Vietnamese payments company. So certainly a lot of interesting activity here happening from the banks as well, who are also actively investing. We'll be doing a deeper dive on Goldman in the next couple of weeks as well, and digging into all of their sort of fintech strategy and investments. But here you see sort of what it looks like. And since 2012, we saw these top banks participate in about 72 deals totaling 3.6 billion to fintech companies alone. So certainly interesting to see how that breaks out here. We did the same for European banks, and here you see approximately 70% of investments from European banks actually went to U.S.-based companies. These are companies including Symphony, Visible Alpha, Sigfig, which we see an investment from both UBS and Santander, Cabbage, the lending company here in the U.S. So certainly European banks also involved, including Santander, UBS, and Deutsche Bank, among others. BBVA also has invested in companies like Adam Bank, the challenger bank, digital challenger bank in the UK, but also spun out the Propel Ventures as well earlier as of and making separate investments outside of BBVA. So let's look at US quickly and see sort of what the numbers look like here. Close to $2 billion invested in Q2 alone to VC-backed companies. Here, we don't put a run rate on this, but if we were to sort of duplicate the total that's seen in the first half of 2017, perhaps we might see sort of an uptick from 2016, where we saw a drop-off from 2015 in terms of U.S. fintech activity. 2015, we saw a large amount of funding dedicated to marketplace lenders, companies like SoFi, Cabbage, and many others, Avant and others. So certainly, we didn't see that happen in 2016, and now in 2017 it'll be interesting to see sort of where fintech investment totals are driven by as we look towards the second half of the year. We did see sort of quarterly an increase in Q2, driven by some of the investments that we saw and talked about earlier, companies like Clover Health, AvidXchange, and Robinhood. So you see the trend here. Interestingly, though, we did see actually deal activity decrease, and something that we continue to watch, whether, despite more investors getting into the space, deal activity has actually decreased over the last 3 quarters to venture-backed fintech companies. Another thing we'll be keeping an eye on as we see sort of the second half of this year, perhaps because of opportunities shifting in different verticals of fintech. Deal share Series A hit a 5-quarter high in Q2, and we see sort of the distribution here. C deal share did drop a bit in Q2 from 28% in Q1 17 to 23% in Q2. Early stage, we did see a bit of an uptick as well in early stage funding, despite deals remaining level from Q1. So this was driven by some larger investments, including R3 and some of the others we mentioned as well. Deals actually hit, if you think about deal activity at the early stage, actually would be a 5-quarter low in Q2. Funding increased, but largely was because of a few rounds. So you can take this sort of in a more nuanced way to say that deal activity is actually down, and the funding has been driven just by a certain few companies. Early stage deal sizes did also drop in terms of fintech in Q2 after climbing to 4.2 million in Q4 16. We did see it fall for the second time in terms of median deal size in the U.S. to 3 million in Q2 17. We did see late-stage fintech deal sizes rise to 38 million in Q2 on the back of some of those large rounds that we talked about. And here, the top 10 fintech investments to VC-backed companies in Q2 spread across certainly a number of different verticals, whether that's in real estate, companies like Cadre, lending, Upgrade, insurance, Clover, Bright Health, wealth management, Adapar. And so we see a number of different verticals still represented among the top deals, and collectively these companies raised have raised a pretty significant amount of capital, and 6 of them actually raised $100 million or more in Q2. Corporates, actually, we did see a spike in amount of corporate participation to US VC-backed fintech companies, representing about 35% of all transactions in Q2, notable increase from previous quarters. And when we look at the most active VC activities just in US companies, we see some of the names we mentioned earlier, as well as the presence of several corporates, companies like Google Ventures and American Express Ventures, but by and large driven by the sort of multi-stage firms like New NEA, Khosla Ventures, and Andreessen Horowitz. Very briefly, just look at California versus New York. We have seen fewer actually VC-backed fintech deals to California as of late, despite a bit of an increase in funding in the first half of this year relative to the latter half of last year, which is certainly interesting as we think about some of the markets that we're tracking. New York saw a slight increase in funding in the first half of this year relative to the latter half of last year, deals, excuse me. But again, funding was very much driven by a couple companies like Cadre and others, which raised about 170 million of the aggregate fintech investment in Q2 17 in New York. Next, let's dive into Europe, and I will say that we're going to dive much more specifically into the specific themes in Europe later this month, whether that's PSD2, MiFID 2, whether that's MiFID regulation, and whether that's some of the new regulatory things we're seeing happening in the UK. We'll be doing a much more deeper dive into the Europe fintech landscape later this month, but we'll just go through some of the high-level numbers. I think in Q1 we were surprised by what happened in Europe. Despite maybe perhaps some of the headwinds in the region, actually we did see, when we look at sort of where the first half of funding is compared to last year, already we've seen match the sort of annual total in 2016 in the first 6 months of this year, and we'll expect to see deal activity reach a new high this year in terms of European fintech, while funding potentially could break the 2 billion mark, which we haven't seen over the last 5 years. As well, as we mentioned, that Q1 spike was very notable in Q1 17 in terms of fintech investment. But Europe fintech investment in Q2, trended, was largely driven by some rounds like a big sort of strategic investment into Creditech by Nasper's PAYOUT. That was a $120 million investment. And we did see a bit of a drop-off, slight pullback from the Q1 spike, but still certainly ahead of quarterly totals from what we saw in 2016 in Europe. Early stage fintech deal share in Europe did drop in Q2 to a 5-quarter low. Combined Series A and C deal share dipped to about 53%. You may see rise there, but that was primarily due to a rise in sort of corporate minority stakes, strategic investments. So companies taking stakes in certain fintech companies in Europe alone. And then early stage activity, we saw a notable increase in early stage fintech activity, over 50 early stage fintech deals to VC-backed companies in Q1 17. That dropped off to sort of levels we saw in the latter half of 2016, 30 deals across 126 million to seed Series A fintech companies in Europe. Fintech deals in Europe. Here are the top 10 European fintech deals that we saw in Q2 alone. As we mentioned, the Creditech investment in Germany was the largest deal. And of the sort of 500 million in funding in Europe, more than 370 million was actually raised by these 10 deals here. These were, across different spaces. Blockchain raised a new round, Scalable Capital, as well as other companies like RateSetter and others who all raised over $15 million in Q2. Zopa as well, the companies that's been around since around 2006, also raising a new round of financing. Corporate position pulling back slightly in Q2, nothing sort of too notable here that we can dig into. But most active VC investors in Europe, here you see some of the names there. Speed Invest, most active VC over the last 5 quarters, and then Seedcamp, Index Ventures, as well as other firms, mostly European local funds who are sort of primarily driving fintech deal flow in the region. UK versus Germany, very quickly, we saw, because of some notable deals to Adam Bank and Funding Circle, which were the first sort of big mega rounds in Europe we had seen in a while, which drove up Q1 investment. We did see that pull back a bit in the UK to 164 million. So it'll be interesting to see, what happens as we move into the next latter half of this year. And then Germany, you see some of the scale differences here, but after dropping into Q4, we did see an increase in Q1 funding as well in Germany. But actually in Q2, we also saw, funding increase largely on the back of Creditech's round. But so it will be interesting to see, where Germany ends up, also relative to the UK, as we sort of sort through the rest of this year. Lastly, we'll dive very quickly into Asia. Here you see sort of the annual totals to VC-backed fintech companies in Asia. You saw a burst of investment in Q2, putting total deals back on pace to surpass 2016's record after sort of dropping off in Q1. That said, 40% of Asia fintech funding was driven by SoftBank's $1.4 billion investment to Paytm parent 197 in India. SoftBank obviously getting into a number of different companies at very large stakes, not just in fintech, but in a number of different verticals today. And you see that sort of bear out, that large investment bear out in the quarterly data, which we want to put in context here for you in this report. So here you see sort of the surge, but again, some of those mega rounds. Another one was a big P2P lending deal in China at a $1.5 billion valuation. That was a $292 million investment. Compared to the same quarter last year, Asia fintech funding in Q2 17 actually rose 88%, and deals were up 22%. So actually, interesting to see that increase in deal activity in Q2. Early stage deal share actually grew to a 5-quarter high in Q2 as well. Certainly, probably the most notable part of this was the increase in seed and Series A deal share. Less growth stage deals that we saw in Asia in Q2, more focused at the early stage. And here, as that shows, the seed and Series A funding accounted for 170 million, while deals really grew significantly from what we saw in recent quarters. and deal share as well, deal size as well, rising in Asia on the back largely of several sort of $10 million plus early stage investments. Those include companies in China like Zhongan Financial Holding, ICE Credit, a new sort of credit scoring company, as well as Jusaikat as well. Here you see the top 10 Asia fintech deals we talked about, Paytm, but here you see some of the others. WeCash, another big deal in China in Q2, as well as several others. China claims 7 of the top 10 fintech deals in Q2 17, and India claiming 3. So, it'll be interesting to see how this changes over time. We'll be digging into the Southeast Asia landscape in the next month, which also has some very interesting developments happening there, including in the consumer financial services side. CVC participation notably higher. We do see a lot of strategic financing in Asia, but that dropped off a bit in terms of share to 1/3 of deals in Q2. And here you see the most active VC investors in Asia: Fintech Funding, 500 Startups, Matrix Partners, SBI, Sequoia Capital India, Zen Fund, and a few others, East Ventures as well. So here, just over the last 5 quarters in Asia, the funds that have been sort of most active in fintech investing in the region. China saw a notable increase in VC-backed financing to fintech in Q2 from recent quarters. So it'll be interesting to see whether that spike continues. And India, as we mentioned, the Paytm funding really drove a significant amount of the total. If you strip that out, it's about 98 million to VC-backed fintech companies in India. So, you can see sort of relative to that on a quarterly basis, we aren't seeing that much investment into standalone fintech businesses in India relative to some of the major investments we've seen, companies like MobiKwik, Paytm, and maybe a couple others. So here we'll leave it at that. Really just sort of wanted to go through a lot of the numbers for you, break down sort of the report that we put out earlier this month, and sort of put some numbers in context for you. We'll be diving more deeply into a lot of the trends, the actual sort of activity in Europe as well as Southeast Asia later this month as well as next month. So look out for those, which will be much more deep dive into a lot of the companies and underlying trends rather than sort of the investment dollars. So I think Riley's been aggregating a few different questions we have here. I will take a look and see if we can answer a few of them before we wrap up. So one question we have here is this all software or hardware too? I will say most of the investment, especially in Q2, was driven by software companies. We haven't seen too many hardware-focused companies or hardware software blended companies raise or drive a number of the investment into fintech, at least from what we see in the data. How many companies are in your global fintech collection? I don't have the number off the top of my head right now. I will say it's in the thousands of companies that we're tracking. This report specifically only looks at venture capital-backed companies, so companies that have raised money from a venture capital investor, with the suggestion that these are companies that are trying to grow to a certain scale. So we don't look at companies that have only raised angel financing. Obviously, because it's an investment report, it also doesn't look at companies that are sort of self-funded, nor does it look at companies that have only raised money or been bought out by private equity firms. So this is just a subset of our data, and doesn't sort of reflect sort of all the fintech companies and investment that we're tracking on our database. Do you have any comment to make on Europe PSD2? I do not here, but I will say that we will be diving into that. I believe Riley, let me know. August 29th, we'll be doing a deep dive, including into PSD2 in Europe. So I will leave it for that instead. And we'll be putting out some research related to that as well prior. So I don't want to spend too much time there on it. When will the Betterment versus Wealthfront report be released? We will be targeting that to be released next week. We dive into a lot of the filings, as well as break down sort of the product roadmap and development thus far to the two companies, and look at hiring data. It's a number of different interesting insights that we've gathered and spent a lot of time diving into. So we're looking forward to releasing that as well, potentially next week. Has growth in fintech companies focused on systematic trading for hedge funds slowed, or is that continuing to grow? We haven't seen that be a big focus area of startup formation or venture investment as of late. So I would say I don't think it's an area that we're seeing a large amount of growth. That said, we are seeing more companies focus on capital markets technology, whether that's in companies providing sort of new data platforms and data sets to institutional investors, whether that's on helping them enable them on the trading side, as this question alludes to, or communications, compliance. So we actually are seeing more activity in the capital market side, but not necessarily all related to on the trading side of things. Regardless of China and India and the Asian market, are you looking at any other countries? We're spending a lot of time right now focused on what's happening in Southeast Asia. It's an appealing region for a number of different reasons. Credit card penetration is less than 5%, but smartphone penetration in markets like Indonesia are closer to now 50%. Obviously, it's a very young population. If you think about Indonesia, for example, it's a market where the average age is in the 20s. So we're looking at how fintech will develop there, whether we'll see sort of leapfrogging trends in the Southeast Asia market. What's interesting about Southeast Asia is that some of the companies that are now looking to digitize payments are actually the ride-hailing companies like Grab and Gojek, who are developing their own payments platforms and driving adoption through promotions and discounts. And Singapore, we've seen a number of companies, as well as now moving into Indonesia and some of the other markets. So that it's one of the most interesting areas we're diving into, and we'll be putting out a lot more research on the region in the next few months. I think we'll do one last question. Can you talk about how blockchain will impact fintech, either in totality or specific verticals, or perhaps blockchain-related funding? Certainly, on the funding side of things, we've seen less interest in investment on investing in the making equity investments into blockchain-related startups. That certainly bears out in the data. We are also tracking all the data related to token sales. We have not integrated that data yet, but we're making use of it and trying to break down where those companies are focused. We have a market map for CB Insight subscribers around companies that have done token sales over a certain amount that we'll be releasing relatively soon. And but certainly, I think if you had seen recent news, you'd seen funds like Union Square Ventures, Bessemer Venture Partners, and others mention that they're going to be they've gotten sort of LP approval to dedicate certain portions of their funds to tokens. So it'll be interesting to see what happens there. We don't have any sort of predictions on where that's going to all go, but we are seeing certain movements, and we'll continue to track that as well. So with that, I think we'll wrap up. Thanks for joining, and as I mentioned, we have a number of different reports and webinars coming up that address much more specific questions, but we hope this provided a little bit more context in the report we released, and we will hear from you next time. Thanks. Bye.